computer, but and let's see. And I'll open my chat screen, and so I can see your message. And if you can't get your audio to work, if you want to sort of slow me down and type something in there, that'll be fine.
Oh yeah, no, go ahead. Seeing you loud and clear.
Okay. So, you know, I put a slideshow together. Let me just run through this slideshow quickly, just because it might be important to set the stage. I don't want to spend a lot of time, you know, I don't want to spend a lot of time before we jump right into the market. So, so let me share my screen again. I'm going to put this on slideshow. I'm going to share my screen again, and then we'll just jump through this. So I'm going to click on that, click share. Okay, so I'm going to keep talking, and if I don't hear from you, I'll just keep talking, and because right now with my sharing, I don't think the chat screen shows. Right?
Oh yeah, I'm here. I'm just in quiet mode, so again, I don't annoy everyone here, but I'm receiving everything.
That's all right. And tell me your name if you would.
Oh, it's Tal, T-A-L.
Tal. Okay. All right. Nice to meet you, Tal. Okay. Let's jump through this because I think you're going to find this informative. Let's see. Let me go to the second slide here. Can I do that? Yeah. Okay. So first of all, I got to do this disclaimer, right? I'm not a registered financial planner. I don't have any intention of becoming one. Nothing is intended to recommend any security for purchase or sale. This presentation is for interest and information only. And before buying or selling, you need to consult your own planner or whoever. And my last bullet here is, I put this one in because somebody said, well, my wife told me. And I said, well, okay, you should have consulted her. You especially consult those people in a position to criticize your financial decisions after the fact, professional or not. Girlfriends, mothers, wives, whatever. You need to, don't have them call me. And like we spoke about, this Zoom meeting is being recorded. So as long as that's okay with you, let me jump forward here. Okay. So we did the disclaimer. I want to talk about goals and objectives. I'll give you a 30-second thumbnail sketch about me, the strategy review, a trend definition, because I find that most people don't really know what a trend is. And if you want to do reasonable swing trading on any basis, you really need to know what the trend is. And I'll show you exactly why that is. And then we'll jump into the market and take a look at the way that I find stocks. And I think you'll find that very interesting if you're just getting going here. And then I'll show you a location for some additional resources. Okay, so this is not day trading. I spend as few as 15 to 20 minutes a day finding stocks and placing orders. So if you can't be at market hours, one thing I hate is sitting in front of a computer for 8 hours a day. Throughout my career, I entered orders mostly outside of market hours. And I target a growth of about 15% a year on a fairly consistent basis. So that's a little bit about goals and objectives. Just a little bit about me. I have an electrical engineering background. I was a full-time engineering and program manager for large programs. So like I mentioned, I didn't have time to sit in front of a computer and watch the markets. So I placed orders after the market was closed. I've been trading and investing since charts were published on paper, and commissions were $200 to $250 a round trip. So I've seen it all, I believe. I don't believe in long-term buy and hold, and I enjoy just about anything outside. So that's a little bit about me. So here's the strategy. I use TD Ameritrade Think or Swim. I find it to be the most user-friendly and most user-interactive platform around there. And besides that, it's free. So I don't know what you use, but if you don't use TOS, I'll show you on the last slide where you can get it for free. And it's a phenomenal piece of software. So the problem to solve is to find the best stocks at the best time. And I think I'll explain how to do that here. One of the major issues that nowadays there's so much conflicting information. I find that a lot of people suffer from paralysis, right? I mean, there's so much good information that you just don't know what to do. So you either don't do anything or you let your emotions take over. So, so the way I do it is I work from a list of top stocks with excellent earnings and, even more importantly, projections for higher earnings. I favor higher price stocks because I want to buy stocks that institutions are buying, right? So if a stock's worth $100 versus $500, everything else being equal, I'll buy the $500 per share. Even if I can only buy one share, I'd buy that over the lower price stock, because big institutions can hide more money in those higher price stocks without moving the price. I find stocks from the leaders list that I update daily. I wait for a pullback, so I'll show you how to get that. And if I'm wrong, I get out. I don't wait for a small loss to turn into a big loss. That's what kills your portfolio. So let's make sure that we understand what a trade, what a trend, an uptrend is. So, if I'm telling you things you already know, just tell me and I'll skip by. But this is what I look for. I look for, say again?
This is great so far. Thank you. I appreciate you taking the time to explain this.
Yeah, okay, good deal. So what I find, what I look for are, this is the price line, right? You might not see it this smooth, but it typically goes from an area that's technically cheap, which is the what I call a trend price floor, to technically expensive, right? So I'm trying, what my goal is to buy down here where it's technically cheap, and either sell or hold up here where it's technically expensive. That's typically what swing trading is, right? You buy it when it's cheap, you sell it when it's dear.
Oh, I'm sorry. Is it Jeff or Geoff? How do I pronounce your name?
Jeff.
Jeff, I'm sorry.
Yeah.
Thank you. I'll actually save you some time. So I do have some background. I understand support and resistance and EMAs, and I don't want you to waste your breath.
No.
But no, I appreciate the background.
Okay, that's awesome. Let me jump forward here. Let me jump right into the. Let me get out of this, and I'm going to go right into the market here. So, can you see my screen? It has a whole bunch of colors and a chart right in front.
Yes.
Okay. All right. So this is what I look for. I have TOS set up to show me a weekly chart on the left and a daily chart on the right. Okay. This right here is my list of top stocks. All right. So if you went to my website, and I'll show you where you can get those, this is my list of top stocks. It has the symbol over here, industry, the earned bars before the next earnings comes out, and the earnings date, the dividend yield, because even if I'm swing trading, all else being equal, I'm going to take the dividend stock for several reasons. First of all, I might catch a dividend while I'm in the position. And second of all, if it turns really bullish, if it goes parabolic, I might hold it longer than a couple of days or a week. So if there's a dividend, I want to pick up the dividend. Now this W 3x8 and daily 3x8 is my custom strategy to find those stocks not only in a trend, but find out when they're in pullbacks. And I'll tell you how I use these columns here in a minute. And this column here called price is a price, what the price is actually doing today. In other words, when it says up, the price on that stock is higher than yesterday and higher than it opened this morning. Does that make sense?
Yes.
So on a swing trade, I only want to buy stocks going up in price, right? So the first thing I do is I sort by price, and you can see there's 1, 2, 3, 4, 5 stocks only today that are going up in price. So without going any
higher highs, right?
No, not necessarily higher highs, but higher on the day.
Oh, on the intraday, okay.
On the day. In other words, the price of WAL is higher than yesterday, higher than yesterday's high, and higher than today's open. In other words, it's going up in price. Right, let me show you what I mean. I'm sure you can imagine it if you're that familiar with trends and stuff. Okay, so here's wall, right? Here's the daily chart, right? So on that bar right there, you can see that today is higher than yesterday, and it's higher than the open.
Gotcha.
I'm only gonna swing trade stocks on an upswing. I never buy stocks that are going down. Fundamental reason is you don't know how low they're going to go. And
right.
The best part about this is you don't know how high that's going to go. And we can get into some more indicators, but that's one of the first things I do. So first of all, I know that the market's pretty dismal. There's only 5 stocks out of about 100 that are going up. So if I open my computer at 10, now there's only 1, 2, 3, now there's only 4. So if I open my computer and was going to trade today at 10 o'clock, I'd probably shut it back off and find something else to do. Okay, so that's number one. The second thing I do is, depending on what has happened here, I'll click the daily 3x8s, right? And that's going to give me an indication of the stock's bearishness or bullishness, right? And you can see that on the day, all these are bearish, all these are in caution mode, and all these are continuing bullish mode or new bull. Now, what do I mean by that? Okay, so let me show you this one right here. Let me click on Tesla. Well, Tesla, okay. So on the weekly trend, it's continuing a bullish phase. On the daily trend, it's bearish, right? So let me click on that guy. Everybody knows what Tesla's doing, right?
Very, very bad 2 days.
Yeah, it was, the time to buy it was, early September when it initially broke out of a base. But so on the weekly chart, which is over here, I have this set up to show me the entire history of the weeks, because the other thing that I want to do is always buy stocks that are making new highs. Right? New highs make new highs, new lows make new lows. So you can tell that on the weekly chart, Tesla is still in a pretty good uptrend. So we got that one working for us. But look up here on the daily 3x8, it says bearish, right? The 3x8 has crossed. If I owned that stock, I would have sold it right here at $1,175.85, because that's when the 3-day, which is the red line, crossed the 8-day. You with me?
Okay.
Right? So that's that for a swing trade, that's brain dead simple, right? It crossed right here, the 3-day crossed the 8-day on the daily basis. The time to buy it was in here at about $800. The time to sell it was right here, like I said, at about $1,100. So what's that, about a $300 profit? And you would have been sleeping well at night, and you wouldn't have suffered this 10% drop. That's what I look for.
Are you looking at primarily the 3 and 8 EMA crossovers?
For this strategy, yes.
Okay.
Right. My other strategy, which has a lot of alerts, they come out based on these indicators down here without looking at price. So that gives you a different view on a different way to look at stocks that you might want to buy. Right. Now, the other thing I do on Thinkorswim is, see this far right-hand column with the blue check marks? Right. So when I see if either the weekly or the daily is red or yellow, I put a check mark on it. All right. So DDS is going to get a check mark, and you can see I haven't done this yet today. This is fresh today. So these I'm going to give all a check mark. Now, I'm not going to bore you while I check all these, but let me tell you why I do that. Because if I come down here and I see a check mark against 2 green boxes here, like this one, right? I know that yesterday, at least one of those bars was caution or bearish, right? Because it's got a check mark. So that is an indication to me that that has perhaps reached a optimum buy level. So let's click in there, right? So you can see on the weekly basis, it's broken out to a new high. On the daily basis, it's a little extended. So I would pass on that stock, even though it has switched to a continuing bullish sign, right? What I might do is put an alert right there, because it's creating a base, right? And I want to know if it's going to break out above that base, because it could go parabolic, and I want to know about it. So with TOS, if I put an alert there, it'll text me or email me, or however I've set it up, that it's maybe making another run. Right?
Nice.
A.O. Smith has a super chart on the weekly basis. Let's just go back and make sure. Right. So this is all weeks, right? I want to buy new highs. I don't want anybody above me looking to get out at a higher price. So I can tell it's making new highs on its stock price. I don't buy new lows, because new lows typically create new lows. I want new highs, because stocks will create new highs until they don't, and that's what I'm looking for. So on TOS, you can easily zoom back in on the weeks, right? This was a trend that I put on some time ago. Let me show you how I do that. Let me remove this drawing. And I'm going to put on just a simple, let me change my mind here. I'm going to put on a channel, right? So I'm going to draw a support here. I'm going to drag it back to about here. Excuse me, I picked the wrong tool.
Hey, Jeff, have you ever experimented with these softwares that chart support and resistance automatically? Have you ever played with those?
Yes, I have. I found them to be sometimes accurate, frequently not.
Okay.
All right. If you learn to do this, without an automatic tool, you'll pick up idiosyncrasies that other people don't pick up. Like for instance, on the weekly chart, right, you can see quite clearly that there's a support level there. Right. So if this is going to pull back, I would expect it to find support at the daily chart. Right. And if it comes down here, I'm fine with that. If it breaks out, I'm fine with that also. But this gives you, if you do this sort of channel analysis, this gives you the support here and the upper channel here. And remember when I showed you that trend line, this is technically expensive.
Yeah. This
is technically cheap, right? So the time to buy this stock was right here at about $66 when it broke out on there. Okay, is that helping at all?
Oh, absolutely. I was going to ask, do you, because I've seen on your other videos, I didn't have a chance to check out all of them, but you mentioned that you were using ADX for trend strength. Do you do that in a different strategy, or is that something you always keep in?
I did that because people ask me to put that on my list. I typically don't do it because I find out that it's late, right? Here's ADX down here, right?
Yeah.
See, if you waited until the ADX gets above 20, which indicates a strong trend, you've missed, maybe a handful of bars.
Yeah.
I do find that the DMI, the DI plus and the DI minus, which is these green and red line here, I find that a little bit more useful. See where they crossed right there on 1027? That was right when you were getting a 3x8 indication also. So this is the ADX number. This is the DI plus and DI minus. So when they cross like this and you see a 3x8, that is a very good signal. You can see the MACD crossing up here. This is on balance volume, which is increasing here. So A.O. Smith was an excellent buy right here in this range. You could have bought it on that bar, and you can see it hasn't come back down to test any of that breakout stuff. So you could have got it at about 70, and you'd be at about 78 now, looking to maybe sell, right? Because I would have put, if I owned this at here, I would have a stop right here at about $76.78.
Yep. That makes sense.
Makes sense?
Yep.
Okay, so that's how I find them using this list. Now, that was an example of a stock that had a change from yesterday because it had this check mark on it, right? Now, let's look at these down here. I got on power, I've got caution on the weekly basis, a new bullish move on the daily basis, and yesterday, either or both of those were red. So let's take a look at power here and see what we got. Okay, so here's power. Let me take this off here and make this a little bigger. So you can see that I had already done this analysis. I already had a stop right here, right? So if you look at that price action, it's building a base, right? And if it does move above there, even though it's a new bull now, it's giving me an alert that it might accelerate in the upward direction. But I don't like the indicators. The MACD is not positive. Unbalanced volume is not positive. And the DI plus is maybe crossing the DI minus. So I'll, I'd keep that alert there. And if I get an alert, I'll take another look at it. But today, it's in my mind, it's not a good purchase. Let's look at healthcare provider Anthem. Okay, that is at the top of its channel, so that's risky. Let me put one of these on here. So I'm going to do it from the most recent support and drag it back to where it broke out, and then I'm going to put a channel line on. And I have these colored to remind me that red is technically expensive. Green is technically cheap. This is where you want to buy that. So,
good mnemonics. Yeah.
right, it's caution on the daily basis because the 3 week, the week moving average, the 3 week moving average is starting to flatten, right? So it maybe is not only at the top of its technically expensive channel, it's starting to weaken at the top, right? Not the ideal. It's in the middle of the channel, which could be okay. You might find some support here. It had a big breakout here. So again, I might put an alert right there. Oops, sorry.
Yeah, pretty low volume too. So,
Yeah, the volume's not that good. The volume's dropping off a little bit. So I put an alert there and just watch it, right? Unbalanced volume is flattening out. That's a good observation. But DI plus is picking up. So I'm not against putting alert on here. And if it breaks through that price channel, I'll get a text or an email, but I'll keep watching it over here. And if I see that weekly go to a new bullish move, then maybe I'll change my mind. Okay, and I can also sort by weekly 3 by 8. Okay, and I can see that there's several here that are double bearish. LPX was a boomer, but let's take a look at that. So that's a bearish pattern, if you ask me. See, I had a trend line on it. It broke out above that. I have a mark here because LPX is a pretty good earning stock, but right now it's in a bearish mode. I would not consider buying the stock at all. It had, let's see, it had pretty good earnings, 50 cents more on 350. What's that, about 4 or 5% higher than last? And on TOS, you can go back and look at the other earnings too, which is very useful and get an earnings trend, right? So these are all bearish and caution. Here's one of caution with a new bull. I think we just looked at power, did we not? Yep. Here's one that changed. It's now up, right? So let's take a look at EWBC. Okay, so it's up. It's above yesterday's high. It's looking positive. Let's put some trend analysis on there. We'll go from the recent low back to an earlier low. So it's touched it twice, but there's the top of the channel. It's in the middle of the channel. In my mind, it's got to get over this high here because these are sellers, right? There's a lot of sellers there. Oops. And that was a big volume day. So I'm going to put a support line right there. Right? And I can see that the daily action is right above that support line. Right? So I might put another trend line here across the tops because if it breaks that trend line, it may be taken off. Now on TOS, which is really awesome, you can put an alert there. You can create an alert withdrawing. If it crosses above that trend line, I'm going to get an alert. And it'll update it every day. So if it wanders down here, still below the trend line, it will keep tracking that until it breaks above it. Doesn't matter how long it takes. If it's 6 months, it'll keep managing that trend line and let me know when it gets above it.
Nice.
Okay, let's take another look at it there. Well, there's let's see. Let me sort by symbol here. Let's look at one that caught my eye yesterday. Right, it's back on a caution, but a line, right? A line. I'm sorry. It's just past earnings, right? So it broke through the lower trend line, but it found support at this green cloud. It's a Ikimoku cloud. I put an alert on it right here, right at 7:14, because I want to make sure it stays above that cloud. The other trick on Ikimoku is to wait until this cloud turns green. This is an awesome predictor on future prices. Not guaranteed, nothing's guaranteed. But once you see this turn green in the future, like the weekly is green in the future, but the daily is showing some trouble. MACD is slowing down, unbalanced volume slowing down. DI plus is still above it, but I would bide my time on this one. But I want to know if it breaks out above that one.
Yeah, let me know if I'm being too loud. Sorry. I'm sorry, Jeff. I'm just talking to the.
Oh, that's okay.
I'm totally listening. Yo, this is good stuff.
Now, the other one I looked at yesterday was MTDR, which is part of the oil and gas sector, which has been doing very well over the last.
Yeah, utilities.
Months, I would say. But on gas and oil, So you want to make sure that all your stocks are above new highs, right? So MTDR is one of the rare ones that is reaching new highs. So I don't ever want to buy a stock that has overhead supply on it. Let's look at a couple more. I'll show you CNQ. I'll show you what I mean. CNQ is not, it has overhead support, right? So this is the all-time chart for CNQ. So if I zoom in on this, its all-time high was right here, right? So on the daily chart, it's still, that all-time high is still above it. That is some serious resistance. But on MTDR, I'm waiting for that stock. It's at all-time highs. A little bit overbought, but you never know what's going to happen on overbought stocks. If you look at the 5-year chart, I think I showed you this before, it's at all-time highs. Unfortunately, it's a little extended, but you never know when it's going to pull back. All right, so that's sort of overbought, but it's in the middle of the channel. So its earnings were good. It actually was, that's almost what, 25% increase in earnings last quarter. So it could break out here and run. But I put an alert there. I want to know when it goes above 45.85. All right. So that is in general how I work this list. And that's all I do.
Do you look at macro data a lot? You know, following Feds or calendars, just to, you know, like asset correlation. I understand that is a big factor in terms how stocks behave. You know, is that something you do? Or is it mostly do you stick to being a technician, just looking at charts?
So I do two things, right? These lists that I post, and I'll show you where you can get them. This list is the highest. It's a combination of fundamental characteristics, and I look at earnings, debt. There's a bunch of stuff that I look at to filter out earnings, filter out good fundamentals, and they have to have good predicted earnings, right? So there's 101 stocks on this week's list of top earning, and then I take those stocks and I shove them through a technical filter. And I'm looking for things like resistance to downturns. I'm looking for strength across a number of indicators, and then I put them on this list. So I don't know if that answers your question or not. I'm sure there are other good stocks that are increasing in price, but I found for my strategy, I want good stocks with good projected earnings and good predictions of increase in earnings, because fundamentally that's what drives stock prices.
Yeah, no, I agree. Is the screener on the left, is that a proprietary? Is that yours, or is that Thinkorswim kind of a boilerplate?
No, that's mine, and you can get them on my website. I don't know if you've been to my website or not.
I haven't checked it yet. Yeah.
Okay, so let me do this if you want me to. Let me. Can I open up a new browser here? Let me see if I can open up a browser.
I like, by the way, how methodic you are. I was also an engineer. Well, not a real engineer. I was a programmer. So,
I was a programmer for a long time.
Oh, nice. Okay.
Yeah, I was electrical engineering, and then they wanted me to do some programming, so I did that. But yeah, I was a software guy from a long time ago. So yeah, so that's how, so I had written a lot of software that produces these lists. And I get data feeds that I just pull stuff off. So none of this information is proprietary, although you know, you can't use it very effectively unless you sort of filter it out. Otherwise, you just get too much data, right?
Right.
So on these stock lists, so this is what I do, Tal. I screen for superb fundamentals, exceptional earnings, and increasing earnings. I then screen for bullish chart patterns. I take out anything that doesn't have a sales growth above 10% a year. Right? Market capitalization above $1 billion, because I want to play in the big boys party. I don't want to play in penny stocks.
Right.
I'm sure
Dangerous.
I'm sure there are strategies that make money in penny stocks, but quite frankly, I don't want the volatility. Right? I want to buy when the big boys are buying, and I want to buy when they're buying. And an average trading volume above 250 shares. So that gives me a good small spread between the bid and the ask. And there are others, but that's the gist of it. So I post them every week. So here was the list for last week. If you go here, and I changed my strategy a little bit because a lot of people were asking me how I can get them better. So if you go here, you can open Excel spreadsheet of those stocks, or you can download a PDF file. Your choice, right? So if you open of course, if you open an Excel spreadsheet, you can sort it the way I had showed you, on TOS, which is far better. Or you just download a PDF file. You can also.
Yeah, I checked it out. I was actually looking at applied materials, just because I'm interested in solar. And yeah, no, I saw it on your tracker, so I had a chance to look at some of this earlier this week.
Okay. Well, I'm glad it's being useful to some people. I get some good reports back. But there's a lot of people, I don't go to a lot of chat rooms, but there's a lot of penny stock and pump and dump and stuff like that. But I don't like to spend a lot of time at this. I want to come in, do my stuff, and be done. And I do this sometimes. If I'm away, I'll check it after hours. And if I see something I like, I'll put in a stop buy order above my alert price. Right? If I really wanted to buy this stock, right, I would put in a stop buy order for any price above maybe 47.14, 47.15, because my estimation is if it's moving up, then I want in. And while I'm doing that, I would also put a stop price right here at about $36, about $39, $38. Because if I'm in it and it immediately turns around and goes down, I want to get out. I want my loss to be as small as possible. I don't ever want to be a bag holder on long-term stock.
Do you fear gaps, opening gaps? Because that really scares me. That's one thing that yeah.
You can, in TOS, you can put a stop limit order with a maximum price. So if it gaps up and you don't want to buy it, then it won't execute that order. That's why I like TOS. It's so flexible that you can protect yourself in so many ways. It's hard not to like that platform.
Yeah, I'm gravitating towards this. I took a day trading course, intraday trading, and just looking at the order book and the L2 and having to get up at the crack of dawn because I'm on the West Coast. I got flashbacks from the tech industry, and then I looked at swing, and it's a much more comfortable kind of scenario for me. I fear the opening gaps, because if you're holding overnight, that seems to be a very kind of a risky move, just from a risk management perspective.
It is. Sometimes if I'm on the right schedule, I'll come over here and click earnings bar. All right. So I know that in this case, Brooks Semiconductors had an earn date of 11/10. Now on this screen, I don't know if it's before or after the market. So let's just take a look and see what happens. Okay, so I try to avoid buying anything for swing trading if it doesn't have at least 15 or so bars before earnings. Because you don't have enough time, in my mind, to build enough profit so a drop like this won't hurt you. Right. So let's see, these guys, it's earnings call for, so 3:30 Central Time, and after the market for the announcement. So already people don't like it, or people are getting nervous. This is what I would term a pre-earnings run, right? So if I'd have bought this here, right, I would certainly have either got out before earnings or put a stop right there. You can see it starting to slow down. And you would have captured about 20% from about 100 to 120.
Wow.
right? And you'd be out, you'd be done. You wouldn't have to worry about earnings. Now, if earnings came out great and everybody likes it, I mean, I'm sure you've seen earnings come out great and the stock go in the toilet.
Right.
And,
Yeah.
and you've seen the other thing, right? Where earnings
Oh,
are kind of
bananas.
shitty and the stock goes up by 5%.
Uber's losses doubled and their stock rose 7% after
It's
earnings.
crazy, isn't it?
It's insane.
These announcements have all the ammunition that these guys want, because they can talk up a stock price by saying, this is a temporary situation. We see, huge profits coming in the future. Everybody likes it and the stock goes up. So you just can't predict what's going to happen. But that's
Hey,
how I use it. Go ahead.
Can I ask you something? So you're probably familiar with the concept of a heuristic in programming, right?
Yeah.
So it's not a deterministic algorithm, but it works most of the time.
Yeah.
So basically, like we just discussed, you can't predict outliners like Uber and all these other banana scenarios, but do you feel like your strategy, if that's something that I would have you as a mentor, do you think that's something that as a heuristic works, most of the time? Is that because it just seems like everybody's peddling their own strategy, crossover AMAs and, 3 flag rules and all that. And it's overwhelming at this point, trying to come up to speed on all this.
Right. There are so many strategies. And I'll be honest with you, I've taken my share of classes and real-time stuff, right? I've even joined live trading rooms for day trading. But, for me, I found that it's way too stressful. I'm on the East Coast also. So to get up and get ready for market open during the summertime, it's not so bad now, but I got to get up at 5 o'clock or 5:30 just to get ready for a 6:30 open.
Yeah, that's crazy.
And I just didn't want to do that. I couldn't find anybody in a trading room who was actually trading, quite frankly. Right. So, so to me, it's a crapshoot. I don't like day trading. I don't want to sit in front of my computer. I want to buy profitable stocks in an uptrend in a good market.
Yep.
Right. That's what I'm looking for right now. If you read my market post, I said quite clearly last Friday, or when did I post it? It comes out on Sundays, but I don't post it on my Facebook groups until later in the week. I said quite clearly, this week's going to be tough.
Yeah,
right?
actually you did, and you were right.
Yeah, it's been tough. And look at, so Tal, look at this item up here, right? So when I'm monitoring, if I'm sitting in front of the market, this is what I'm looking at. This is, these work the same way, right? This is the weekly 3x8, daily 3x8, and whether it's going up or down. Now these are futures. I used to trade futures, but I don't do so much anymore, but I like to track them. But look at some of these. Okay, let's look at the Qs, for instance, right? Had a great run. Let me bring this back over here. Had a great run, but the time on a swing trade to get out of the Qs was right here. Right here, right? As soon as I started turning down, the price got below 3x8. This little guy here, I think it was yesterday, this guy here went caution. It's flashing yellow, right? What do you do at a yellow light? Slow down, right? Right. So I stopped out of the Qs. I think yesterday I had enough and I took it out. So I was in right about here, 362, and I got out at 392. I'm done, right? Now, will that turn around? Probably. But I think it might come down here a little bit more and create a base down in here. You look at the Ikimoku cloud, it's green in front, so I'm not that worried about it on the long-term basis, but it's a little extended. It's up here by the technically expensive channel, right? This is not the time to be buying.
Yeah.
On swing trading, now long-term trading is different, right? You probably hold this, but I'm not a long-term trader. I don't believe in it. I don't want to find my account down 40 or 50% in 2 weeks. But I wouldn't be a buyer here. I'm a buyer here, right? Which is right where it broke out on the daily channel. So looking at the week, right, it becomes a little bit more obvious that it's at a technically cheap point. And looking at the days, I'm done, right? And that's a good profit. Like I said, 365 to almost 400.
Are these the only indicators that you use? Do you use RSI or do you ever
Nope.
switch between indicators?
Nope.
That's all you need, right?
Well, this is all I use, right? I know a lot of people use RSI, but here's the deal on indicators. You need to understand that indicators only have 2 things to work from, and that's price and volume.
Mhm.
Every indicator is based on price and volume. So I see people that have got like 40 or 50 indicators on their charts,
Right. Yeah.
right? And that's when it gets confusing because not all of them will be the same. And then you get into, I went through this, right? I went through this myself. So I know what I'm talking about when I say this. You get indicators that will tell you one story that are in conflict with
Right.
indicators that are telling you a different story, or they're not correlated. So
Yeah.
then I started immediately asking myself, well, what the hell am I going to do now? And I ended up doing nothing.
Mhm.
So my suggestion is always pick a couple that you like, that you
Okay.
trust, one that's based on price and one that's based on volume, right?
Yeah.
So the MACD's price-based, right? MACD is a very good indicator. If it's down below zero, that's a bearish indicator. It's above zero, then you can more trust the signals. But you can see it's weakening, right? MACD's weakening. Sorry, I'm done. Unbalanced volume. Now this one's based on volume, right? So I got price indicator and a volume indicator, and then I'm looking at price up here.
Mhm.
That's all I knew. That's all. I know there are others out there. I've tried them, but these are the ones that work for me. So, like I said,
Yeah.
in the other charts, this might work for you, it might not. But this is
No,
what
no. It usually leads to analysis paralysis, right?
yeah, because you get so much data and they all look so good, then I ended up doing nothing or just throwing a dart. And if I'm throwing a dart, what the heck? That's no strategy at all. And the
Hey,
only
have
other
you?
one I put on here is the DMI, which is it's a third one, and I sort of use that as a tiebreaker, right? If I'm down in here and I see the unbalanced volume picking up and MACD accelerating, and I get a signal like this, boy, if the DI plus is above the DI minus, I'm in. That right there is a can't miss signal.
Hmm.
Actually,
I
you would have got it a couple of days earlier on the 3x8, but the DI had not crossed yet. So, it's a little bit of an art, but you got to be careful on which indicators you look at.
actually that leads to my next question, and I'm curious if you think that would be beneficial. Have you heard of breaking equity?
I have not.
I saw this a couple of days ago. It's a trading bot that you can customize without programming, and I appreciate that just because I'm burned out. I don't want to do any kind of coding, but and they have a very nice, very nifty UI that lets you drag and drop and define which EMA crossovers you want and whatnot, and you can turn on and off the bot depending
Yeah.
on whatever you read macro conditions.
Yeah.
I'm curious, maybe if you ever tried like.
So I used to belong to stock charts,
Mhm.
and you can program stock charts in non-programmatic. You just pull in criteria, and you can set up. I mean, there are many systems. This is not captive. This is what I use, right?
Mhm.
And I can show you how I set my charts up. But this I found Thinkorswim to be most effective because, and here's why: stock charts, you can program the same indicators, but you cannot put daily next to weekly.
Mhm.
You cannot correlate a cursor on a daily chart to a weekly chart. Like, see how my pointer's on the daily chart, and I'm right here where I got that breakout, right?
Mhm.
I can instantly see, if you look over on the weekly chart, see where that cursor's moving?
Mhm.
I can instantly see where that point is on the weekly chart. This TOS is the only system I found that will do that, plus give me other things that I need.
Yeah, you got to eyeball
And the
them.
same thing with the daily. I can be over here on the daily chart, and it will show me where that is on the weekly chart. Stock charts will allow you to program, but they don't correlate two charts like that. The other thing that stock charts and many of these other programs don't do is that because this is a brokerage system, if I want to buy this chart, all I have to do is right click and buy custom.
Mhm.
All right. So what I typically do is I buy with stop, right? And it'll pre-fill the order for me. Right? If I do that, it'll pre-fill the order, and I just type in the quantity, I adjust my stop, click the duration, and I'm done. I press confirm and send, and I'm done. You can't do that on stock charts. Now, the other one that you mentioned, I don't know if that's a brokerage front end or not, but these are tricks that I found to be extremely helpful.
Yeah, yeah. No, I'm just playing around. I'm kind of again in the exploration phase. There's so much to. I'm using the Fidelities and what's the other one? Really clunky UI. I can't recommend it. And I haven't played with Thinkorswim, but it does look like pretty intuitive,
Yeah.
pretty nice UI.
So you have Fidelity account also to use their, what's that, Trading Pro?
The power one, yeah. No,
Yeah,
it's
I have some larger accounts that I manage on Fidelity, and
mhm.
their interface is so lame
Yeah.
that it, you know, but they're not a trading house, right? They're a long-term buy and hold. So their
Yeah.
bread and butter is not the trader, right?
No, they don't optimize for burst use cases at all. You can tell by the UI. Yeah.
Yeah, they're buy and hold, and you know, you can finagle around their interface, Traders Pro or something like that. And I use it, but I don't favor it.
Yeah. Okay. This looks good, man.
All right.
Uh,
Any other
well,
questions? You want to look at some stocks on your list? And
yeah, I gotta do more studying before
okay,
I can benefit from all this. I'm just curious, what's your business model here? Because
yeah.
this is very good stuff. I it would be nice if it was altruistic, but are you looking for a kind of a mentorship students or
No. So what my intent is,
mhm,
that chart, that website that I showed you. Let's see, can I get that back? All right. So this website here, I think what I'm going to do is there's a couple of tabs that will always be free, and that's the
mhm,
market analysis tab, and let's see, maybe the list tab. But at some point, if I'm going to continue to provide this stuff out through the web, I'm going to have to charge something to defray my feed costs, right? It gets
right.
pretty expensive to dump this stuff, you know, on the alerts.
Mhm.
So I don't imagine the fee will be very great, but I will. What I plan to do is continue to hold these meetings if there's an audience that likes it,
Oh,
because
hey, I would love to attend, man. I really appreciate you taking the time today. It's very
yeah,
important.
yeah, because you know this. You know, you're familiar with a lot of the stuff that's here, like moving average and levels of support and stuff like that. But I can imagine the first time you see this, it's like, what the hell is this guy
Yeah,
talking about?
intimidating. Yeah.
Yeah, it does. So I think what I'm going to do is I'm going to schedule these for once a week, and if nobody shows up, I'll just go through my list and talk to myself, because I got to do it about my own stocks, anyway.
No,
Uh,
I have, there was just a nurse here that was asking, so I told her I'd recommend you if I thought this is quality, and I am going to do that. So I will definitely evangelize you if
I appreciate that.
you want
Yeah,
more people. Yeah.
yeah. And what I'll do here, Tal, is I'll create a page over here that you'll be able to get these recordings from. So
Okay, cool,
so
cool.
they'll always be, you know, you can send them to that page. And that'll always be free, by the way. I like to help people, but I have costs that that I'd like to start defraying. I only put this website together because my friends asked me to, and I said, well, sure, I can do that, and it turned out to be pretty popular.
I actually was really surprised when I first saw the videos. There's a lot of these gurus online, and they're all pushing really kind of sketchy ideas. And I saw your analysis of the market last week, that it was going to slump after pull back, and I was like, okay, let's see if he's right.
Yeah,
And then it did, and I was like, oh yeah, this guy might actually have
yeah.
something. So I
Well,
started looking at your videos, and
yeah.
yeah, dude, I think I
I
appreciate you
appreciate
giving me.
that. Yeah, I appreciate that. It's not rocket science, but this is what I have found to work for me,
Mhm.
and it's been very profitable. So if I can help other people bypass, the learning curve that I went through, I'm all for it.
Oh, dude, that would be awesome. Just paying it forward, and
Yeah,
I'm
yeah,
looking to become
yeah,
financially stable, and then paying it forward, and so on and so on. That's how you make the world better,
yeah,
right?
yeah. Well, that's what I'm trying to do, because I got a lot of calls about people that say, "Hey, I'm buying this stock, I'm buying this stock," and I say, "Well, it's in a downtrend. Wow,
Mhm.
and people buy more when it's going down." I say, "Don't do that. Don't do that. Find stocks in an uptrend, and if you're right, buy more of that. The problem with downtrends is that downtrends will stay a downtrend. New lows get to new lows until they don't, right? And it's easy to tell when they turn around. You start watching the averages and the indicators, but stop buying stocks that are going down. Buy stocks that are going up. But here's what happens, Tal. I think that the brokers and the financial people in this world have convinced people to buy stocks when they're going down, because for the most part, they're selling them out of their inventory. I believe that's a fundamental problem with not only the media, but many brokerage houses.
Oh, yeah, the media is even CNBC. I mean, it's just all pump and dumps, it's disgusting.
I have a personal policy of never watching news broadcasts. I haven't watched them for 25 or 30 years. And market analysis from quote unquote professionals, they just don't faze me. I watch what the market is doing. There's no other better explanation than what the market is doing.
Which do you do Wall Street Journal, or do you stick to any kind of financial news?
No. I used to, until they all started turning to, like in the 80s, I used to subscribe to the Wall Street Journal. And then slowly but surely it became a more political arm. And I just stopped reading them. All I need is you show me a chart and I'll tell you what the market's doing.
Okay, so you can tell from the chart. You don't need
I don't give a crap what people say it's going to do, because 9 times out of 10 they're guessing, and 9 times out of 10 they've got they've got an agenda. So look at this. So look at the Qs. Where's the Qs going? It's still in a weekly uptrend. It's on a daily pullback. I can live with that. Let's look at the SPY, or let's look at the SPY, which is an ETF, right? It's doing the same thing. It's not rocket science. Right? It's not rocket science. Look at the bonds. For some reason, yesterday the bonds took a huge leap. You see, I got a trend line on the bonds, right? This is the 20-year Treasury bond. It went up, it gapped up, went up, came down. I said, I'm not buying that either, because interest rates can only go in one direction. Bonds are just dismal right now. I haven't owned bonds in 10 years.
Oh, wow.
I watched the dollar. The dollar is going, this is the dollar down ETF. The dollar is actually going up. It's sort of creating a better trend. So the problem with the dollar is you can own it, but it doesn't move very much, right? There's 25 and there's 20. Well, let's see, that's 25.26 and 25.39. So you're not going to make a lot of money trading vehicles like the dollar. You could buy futures on the dollar, but you could get killed. Futures is very dangerous, highly leveraged. But I watched all these. Here's the Vanguard Growth Index. It's on a caution. It's not rocket science, right? They all do the same thing, right? But these are the things that I watch. Gold, I'm starting to get interested in gold. This is the Amex Gold Bugs Index, right? It's above the cloud. The weekly is still weak. The daily is getting stronger. There's a 50-day average and a 200-day average. Here's the Barrett Gold. It's starting to look a little bit more positive, but I'm not convinced that it's a good vehicle for trading right now. It might become that, but I'm watching.
That's interesting. I actually just saw an article today. You don't think because of CPI and inflation that silver and gold might be good hedging vehicles? What's your opinion on that?
Well, first of all, I never predict, right? I just react to what the chart's doing. Silver is, let's see, silver's in here somewhere. Silver, maybe it's not. Silver not in here.
I saw the author of the Millionaire Dad and Poor Dad, and he's like, silver, it's the only way to hedge against CPI. I don't listen to him, but I was curious.
Well, so silver, if you study history, is an industrial metal, right? It reacts to demand for industry uses more than jewelry uses or a store of value. Right? So there's silver. It's been in a downtrend for quite a while. If you're the buy and hope guy, then buy at the low and hope that it goes up. I won't buy that unless it gets above this sort of trend line right there, and especially above this cloud. See this red cloud on the weeks? That's telling me caution. Day's looking a little bit better, but the week has not turned.
And you're looking for a correlation between daily and weekly, right?
Yes. Yep. If the weekly's up, then I'm looking for pullbacks on the daily.
Mhm.
Right. Now let's look at gold. Now gold's very interesting. Let's look at the Amex Gold Bugs Index. Well, let's look at Spider, the Gold Trust Spider. Right. It broke out above both these trend lines that I had on a weekly basis. It's sort of got a lower trend here. Right? If I can buy that. So I was looking at this morning. I got a mark at 177.18 on that, because that correlates to sort of this high here. If it gets above the cloud and gets above that price, I might try buying gold. The problem with gold is that it's contrary to people who will sell you gold. It's not a store of money. If you look at the history of gold, gold reacts to mostly media press. But when you look, it's easy to test this. You take a look at what happens in countries like Venezuela. Now, you would have thought that gold would have gone, out of sight when countries fall apart. It doesn't. What they flood to is still the U.S. dollar. And you can tell this. Here's a U.S. dollar index right here. Where is that going? Where is the dollar index going? There's the last high on the weekly downtrend. There's the downtrend line is broken through it. It made some support here. You can see I already drew a line on it. And it's starting to give you an uptrend. It's not above the cloud yet, but the dollar's looking positive. Why? Because the dollar is the globally trusted source of value still. Now, the dollar is under a lot of pressure. People are talking it down and saying it won't be the reserve currency of the world. But I'm looking at the charts and I'm seeing it go up. Right? So I'm saying, okay, I hear what you're saying, but I'm watching what it's doing. And who am I going to trust?
Mm-hmm. No, that's a good analysis.
If you want to get a good book called Intermarket. I can't find it. It's on my bookshelf. Intermarket Analysis or something like that. I'm sorry, my bookshelf is jammed with stuff, so I can't put my hands on it. Oh, Trading. Right here, it's right here. It's by Murphy, who wrote a lot of technical analysis books. It's called Trading Intermarket Analysis. Right? If you want to find out, maybe you can see it, maybe you can't. If you want to find out how these markets relate, this is the book to go and get.
Trading Intermarket Analysis by Murphy.
Yeah, by Murphy. Yeah, and it talks about how these different markets that I've got up here in this thing relate.
Mm-hmm.
Typically, right? Now there's exceptions to every rule, but if you want to find out how things react to each other, then that's the book to go and get.
Awesome, thank you, appreciate that. Yeah, there's a lot of signal to noise, but knowing who the primary actors are is very important. Otherwise, it's a crapshoot.
Yeah, and if you get good at reading charts, you can call out a lot of people on their fake news.
Yeah, no, I go on Reddit, and it's incredible how much there's a lot of confident people that you can tell who don't know what they're talking about. It's scary because a lot of newbies are listening to them. It's
well
disturbing.
So in my opinion, this market is being driven up by new entries. Now, sooner or later it'll come down, but if you're watching the charts, you'll know soon enough that it's coming down.
Well, I think the interesting thing is, with the proliferation of the internet and intuitive trading tools, this is a trend that's only going to go stronger. It's basically gambling online. More and more people are going to be doing it.
Yep, I agree with you. And that's why I think, swing trading will work for a long time. Buy and hold will work for a long time. But if you look, let's look at this. This is what I want to avoid. Let me look at the SPX here. And I'm going to bring up the weekly chart, right? This is the all weekly chart.
Am I being too loud? No? Okay, cool. Let me know if I need to shut up. Okay, I'm with you.
Okay, so this is the weekly chart. Now, it might not look bad Let me just zoom in on this guy here. Right. This is what I want to avoid here. Right, that was the COVID panic, right? Now, if you were using my strategy, you would have stopped buying, at least stopped buying stocks right in here.
February.
Right, February. As a matter of fact, I was on vacation in Mexico when that happened, and I managed to get online. And I closed everything out.
Yep.
Now, when do you want to get
the news? Yeah.
Well, I watched the charts.
Oh, just the charts.
I
Okay.
don't care about the news. I really don't care about the news. I think they're a bunch of, well, I won't say it, but I don't care about the news.
I agree. I agree.
Watch the charts. Now, when would I have got back in? The ideal time was right here.
Yeah.
Right when that 3x8 crossed again, because you got enough momentum that you're going to make some money. That was at 28.68, and you would have got out here about 32.83. What's that? 400 points? That's a pretty good saving.
Oh, yeah, huge.
Yep. So let's see, can I get this back to, oh, my computer's running slow. Right, so most people will hold through it, but here, over here is 2007, 2008, that was dismal. That went on for several years.
Yeah.
Right, and when was that? Was that down 60%? That's awful.
Mm-hmm.
Right? You don't want to buy and hold in that. You know, if you're used to drawing trend lines, first of all, you should have been out somewhere in here, or at least protecting your profits.
Yeah.
What I want to do is just draw a trend line, just a simple trend line. And people poo-poo trend lines, but look at this, right? There's a trend line across the top.
Yeah.
Right.
Pretty...
If you sell here, right, because you can draw a trend line in this direction, that's above the lows.
Mm-hmm.
Right, and realize something's going on, right across there. If you're down below there and your cloud turns red, that's caution, right? So if you'd have sold in this area at about 1,500, you could have bought back in here at about what, 1,100. That's 400 points. That's what, 40%.
Damn.
Simple. It's so simple, it's pathetic. Anyway. Tal, I got another meeting I have to get to. I told another group I'd give them a presentation similar to this, and that's a more of a private group. So I really need to sign off.
No problem.
I will post this, and I will also schedule another meeting for next week, and we'll see what the market's doing next week.
Sounds good. I look forward to that. Thank you very much, Jeff.
All right, Tal. Yeah, thanks for joining, and I hope it was useful.
Absolutely. Thank you.
Talk to you later.
I'll let the nurse know here to join your meeting next time.
Awesome.
Tell her. Okay,
awesome, Tom. Thanks. You have a great day.
You too. Thank you. Bye-bye.
Bye-bye.